Thank you for tuning in to the very first CanadianMineAnalysis.com podcast. I have the pleasure today of talking to renowned silver guru David Morgan of the Morgan Report. The public right now are really waiting in the wings, in our opinion, and they're waiting for prices to start moving up, as usual, before they can start moving into that market. What's your view of general public piling into silver versus gold? Do you think that they'll be looking at silver because it is less expensive?
Well, I think the first point to reemphasize is that people don't buy bottoms. Most people are taught as investors that you buy low, sell high. However, it's been my experience, and the data will back me up, that people don't buy lows. Very few do. Of course, someone's got to be buying the bottom, but very few in the retail market, the average investor, ever do. If you go back into the brief history of the bull market in silver so far, and you look at it from like 2003, where we bottomed, the people that were buying the bottom were the billionaires, Warren Buffett, George Soros, and Bill Gates. But the general public was not buying whatsoever. In fact, the Central Fund of Canada was selling at a 9% discount to the net asset value of gold and silver, and that's a bullion fund, and that's all it is. There's a slight management fee. So you could actually buy gold and silver under spot price using that method. So that was the bottom of this bull market. And we're at another bottom. And people are not going in very strongly at this point in time. So the second part of the question is, when will they? And the answer is probably once we get to at the $20 level, there'll be some smart investors that'll come in. They'll say, well, the bottom has been proven to be in. We're at this level technically, and that's a good level to get back into the market. But really the general public, the amount of people that will be pouring into the market, that probably won't happen until we get back into the $30 silver range again. And unfortunately, just like last time, you'll see far more silver bought above 30 than you'll see bought below 30. And that's just the way markets are. It's not unique to silver. It's unique to human nature. And the last part of the question was, well, silver versus gold. And at the bottom, it depends on the investor, of course, but on an overall basis, no, gold is much more popular, much more mainstream. Banks buy gold. The central banks have been buying gold for several years. They were net sellers up until several years ago, and now they're net buyers. They don't talk about it. They poo it. They ignore it. They downgrade it. They denigrate it, but don't listen to what they say. Watch what they do. So you've got a kind of a backstop in gold. And in silver, it will take place. Well, there'll be a rush into silver more so than gold in the retail market, in the average investor. But again, that won't take place until gold and silver are both really marching up day after day kind of a thing. So that will happen because silver is more affordable, costs a lot less than gold. But you're not going to see institutional buying in silver except at rare instances like the ETF, Central Fund, Sprott Silver Trust, and those kind of things. And none of those entities have really gone into the silver market heavily during the last few years, which to me is a little bit disheartening because, silver is very low, and now is the time to take a pretty good-sized position, in other words, buy the bottom. And we haven't seen any of these large silver funds come in and buy the bottom, at least not yet.
One of the predictions that Casey Granger made was that silver could potentially be at $27 to $35 an ounce in the next 12 to 18 months. Does that sound reasonable? Do you think that that's a possibility?
Oh, absolutely. I've done well calling the tops when we get there and on the way up, and try to caution people, not to buy a lot of silver when it's really moving strongly up, which is what they do, as I just outlined. The main thing is, is the bottom in, which I believe it is, but I miscalled it. I thought the 1817 print quite some time ago was the low, and it held for 14 months. But then it broke through that, and we're under that now as we speak. Nonetheless, I think once we get above the $19, $20 level and hold that, and it's tested like 3 times or so, and it holds, then we know the bottom is in then at that point. I mean, the probability then is like 97%. I mean, it's really, really high. And so at that point, again, it's safe to go in. And I do think once we start up, nothing can move like silver and soybeans. I mean, these are the two commodities, and especially silver, that once it catches fire, it can really, really go. And it's because, one, it's a small market, and two, it's a very excitable market. I mean, gold bugs have got a bunch of acronyms and sayings and metaphors, et cetera, about, what kind of people they are or what a gold bug is, et cetera. But on the silver side, it's even more extreme. And from my experience, silver bugs are a little more extreme than the gold bugs. I'm favorable to them, but there are some interesting people out there in the silver world, and yours truly is probably one of them. But nonetheless, yes, I think you're going to see a substantial move. And because we know the history of what it did from the $19 to the $48 level, check the chart. It went up pretty rapidly, so certainly it could do it again. Now, there is overhead resistance, and I have to look at a chart to give you kind of the stalling points. But wherever it built a base, that means there was a lot of buying and selling at that level, and there's a lot of disheartened silver bugs. So using an example, I'm not looking at a chart, but let's say, the $30 level, for example, had a pretty good congestion before it went higher. Then there's a lot of people out there at 30 who says, I don't believe in silver, and I'm so sorry that I bought it at 30. I can hardly stand it anymore. It's back to 30. Oh, my God. Thank you, God. Thank you, God. I'm out. I'm getting out. So they sell all of their silver at 30. They broke even. They didn't lose. They didn't win. They hate silver. They'll never come back in the market. That's called overhead resistance, and we will see that on the way up. But still, again, small market, depending on the economy, depending, what the stock market's doing, what the bond market's doing, certainly it could do that. I would say KC is probably correct. It's certainly possible. In fact, we'll say it even stronger. It's probable.
One of the things that I find amusing in a way is when you listen to some of the commentators online, they will justify the price of silver and gold going up by saying, look at the allocation to precious metals overall in the public. What is the percentage of the general public that could potentially want to look at silver, as opposed to saying, well, everybody should have 1% or something like that and just come up with a huge number? Obviously, that would give us tremendous upside. But what do you think is more realistic?
Well, let's look at the facts first, and I'll give you a philosophical answer to that question. So I'm holding the CPM Group Silver Yearbook 2015, which goes through all of 2014 with data. And this is, fairly factual. There's things in here I'd argue about. But on investment demand in bar form, so I'm not answering your question. I'm just looking at silver investment from like ETFs or very large investors like Warren Buffett, that type of thing. India and China were the largest buyers of silver for investment purposes in that form in 2014, estimated to have purchased about 24 million ounces. The rest was North America with the United States, Canada, and to a lesser extent Mexico. So that's what's the investment grade form of commercial bars. But if you flip over to page 33 in this book and you look at what the North American purchases were in the coin segment, what you're going to find is it's far, far different on the coin side, because there was a lot of purchases in coin form in North America, and it was primarily Canada and the United States. In fact, there's a pie chart, and you'll see that on the coin purchases, 31% were United States and 18% was Canada. So if you add those two together, roughly 50% of the coin demand comes from those two countries. So now you ask me, what is the potential demand for, I think you said silver, but let's just talk gold and silver, going forward. And that, of course, depends on really the overall economic financial picture. So this may sound a little kooky, but I want people to think it through and, think about it. You don't have to agree with me. But the demand for money is infinite. I mean, we all have what our needs are. And once those are satisfied, we have what's called disposable income. Most people aren't that greedy. That's not what I'm saying. What I'm saying is that there is that disposable income, and the demand for things is insatiable in the human species. That's not for each individual. It's just the demand for money goes on and on and on. That's one of the reasons that you can, the powers that be can justify increasing the money supply, which is the wrong thing to do. But regardless, so the demand depends really on what the perception of the current fiat system is. So if only 1% of the population knows the game is a scam and knows that fiat always destroys and knows that paper money becomes worth less and eventually it's worthless. If that goes to 2%, then you have doubled the demand. So what I just outlined if the coin demand in 2014 was 70 million ounces between Canada and the United States, it could be 140 million ounces with just another percent of the population waking up. But let's take that further. Let's say that 10% of the population wakes up. Well, that would imply, and this is a linear projection, I understand, I'm just trying to give the correct idea, but I want people to think this through themselves. You could have 10 times the demand that you have right now. Well, what would the price do if there's 10 times the demand? And I think in this instance, it's possible. Last time you might have seen it go from 1% to 2%, and silver went from $6 to $50 in the last year. Gold went from $300 to $850 in the last year. At this time, with the internet and the communications, with Twitter and texting and Facebook and all these things that are at our disposal, I don't think you're going to see it go from 1% of the population that wakes up. So you could see 10%. So I think you see infinite demand, which is in quotation marks. There really isn't anything like that, but the idea is what I want to get across. So it could be substantially greater than it is now. And since silver is such a small market and it's more affordable than gold, I expect silver to outperform gold in a significant way. In other words, percentage. So if you were going to make, for an example, 3 times on your money in the gold market, you might make 9 times your money in the silver market.
Let's look at the back end. One of the conversations that I keep having is, what is the all-in cost of silver production? I hear some very high numbers, I hear some very low numbers, and obviously every mine is unique. You might have they've got their equipment for dirt cheap, they're in an area with inexpensive energy, they have whatever the reason may be. Do you have some sense as to where production costs actually are mainly in the U.S. and Mexico?
Sure do. In fact, that's part of what we do in the Morgan Report, is we do a breakdown on these companies and give you a specific number. So I'm not going to give it away on a company-by-company basis, but let me just say that the all-in sustaining costs is what you need to look at. That tells you if the company is profitable or not. Cash costs are absolutely meaningless. Please Google that. Please do your own research. Find out what a cash cost means. It means nothing. What you need is the all-in sustaining cost of silver. And having said that, the best producer that I know of in the large scale is Tahoe, and their all-in sustaining costs are roughly $11 an ounce, and it goes up from there. A good silver producer, highly leveraged to the silver market, the highest ratio of non-silver elements is First Majestic. They're roughly 90% leveraged to silver. Most silver companies are, take Hecla as an example. It's like 50-50. It's gold, 50% silver, and other byproducts, 50%. So a lot of silver companies are silver companies. Their primary method of making money is through the silver market, but they still have lead and zinc or copper and lead, and they've got other elements. That's okay. It just comes with the territory. But First Majestic's sitting around 14.5 now, and they were at like 22 a year ago. So energy costs and efficiencies and what they've done, my compliments to the company. They've gotten their total sustaining cost down substantially. So that gives you a flavor. I'm not going to go through every one. It's in the Morgan Report. You can do the math yourself. It's rather complicated. But in the new book, The Silver Manifesto, we actually teach you how to do the analysis of a mining company. It's probably not for, a fifth grader, although some of the smart fifth graders could do it. It's not that complicated. So it takes you step by step. So it depends on your interest in the market. Certainly there's another one that you should really pay attention to, and that's for our members only. It's called Archie's Rule. And once you determine what the total all-in sustaining costs are for a mine, you want to apply Archie's Rule. And if you do that, you're going to make investments that basically you can't lose on as long as we're in a bull market. In other words, the price of the stock might go up or down, but you're going to buy a company that's not going to go out of business. You're going to buy a company that is going to be able to survive the lows in the silver market and reap the benefits when silver prices recover and make new highs.
The brokerage industry, traditionally, I guess they're not recommending the precious metals, be it gold, silver, platinum, and so forth. Where do you think they're going to stand? Should the market correct aggressively enough and the precious metals go up, do you think they'll just continue their traditional role of downplaying the metals?
Well, I think we look at history, as we talked off air, and we know from history that, and recent history, That's what they did. I mean, I remember being on CNBC and them trying to make me state that, gold was in a bubble when it hit $1,000. Of course, it doubled from there almost. We got to 1,900 and change. And I wouldn't do it. In fact, I said the bubble's in the bond market. They cut me off. They said they had technical difficulties, and I'll probably never be asked as a commentator back on CNBC. And so be it. So, yes, some brokerages more than others, some mainstream outlets more than others, but the overall conscious or unconscious frame around the precious metals that's an investment that we really don't want to advocate people buying. Now, there may be, like last time, a shift right near the top. And this could be that the brokerage houses themselves have finally gotten in and they need to sell their product to somebody. So you might see, and this is something to really caution people about, if you see a major brokerage house or a major financial channel start telling you that, gold is the greatest thing, if you don't own it, you're going to die. Excuse my exuberance and my exaggeration, but I do the exaggeration for emphasis. When you see something along those lines, be very careful, because you're probably at the top of the market. So if that were to take place, that's one of the surest signs that you have that something is taking place in the gold market and it's getting ready to, sell off. We're at a situation where we've never been in world finance ever. All the system is based primarily on fiat currencies and basically backed by the U.S. dollar. Certainly the BRICS have tried to move away from the dollar and have to some extent. But regardless, everybody is still tied to the dollar to a great extent. So as the dollar goes, so goes everybody else. And there's going to be very few people reaching for the life rafts. And even those that are reaching for them may not be able to get on board, using the Titanic as an example, because I think, and this is what I think, doesn't make it true, that there could be a situation this time where if you go to buy physical silver and physical gold, you're not going to be able to buy it in size. And the prices will be bid up so strong, because if the financial crisis is manifest where that 2% to 10% actually understands what's really happening, people that hold it aren't going to want to sell it. And people that want to buy it may not find enough available. It's going to be scarce. So if that's the case, and I believe it could be the case, then you're going to see a drop down into the next best thing that you can own, and that will be the top-tier cash-rich unhedged mining companies, which we focus on in the Morgan Report. And then the next tier, which is the mid-tier companies that have a lot of upside potential, not only from increasing their production, but also exploration potentials. And lastly, the speculative section of our portfolio will do extremely well. But overall, probably even better will be some of these pump and dump schemes that will come at the end of the market, which means anything with gold and silver in its name will go ballistic, because people love cheap stocks. It's their psychology for most people. They don't understand markets that well. So if they see a gold stock that's 5 cents with a great promoter behind it, they're going to buy it because, oh my goodness, 5 cents is going to go to 50 cents. And those probably will, because there'll be a lot of other people that think the same thing. Very, very difficult market. Bob, there's one more thing I'd like to add, if I might.
Absolutely.
And this is available to Canadians as well as Americans. In fact, it's only available in these two countries. And it's a program to dollar cost average into the silver, gold, platinum, or palladium market. So all the precious metals, your choice. And it's at silver123.net. It's silver123.net. And this is a program that really is great for the average investor, where you just come in and you buy like $100 a month of, let's say, silver. You can store it, which I don't recommend, but you can certainly take possession of it. I know the guys that founded this company. They're doing some very, very interesting things that will be coming out in the not too distant future. So it's a way to buy on a regular basis, dollar cost average in, which is the best way for the professionals to really accumulate a good position, especially now with the prices where they are. And the other part of it is, because they are structured the way they are, they have an affiliate program that's just actually very lucrative. I actually make more on the affiliate side than I do on my purchases. In other words, the hundreds of dollars I put into the silver market every month, I actually get more than that on the referrals that I've done over the last 4 years. Obviously, I've got a powerful website, and obviously, I have a great reach, but it's not a multi-level marketing situation, which I'm very grateful that it is not. It's your own efforts are rewarded for what you do. So if you've shared this with your friends and family, it's a nice way to generate savings in precious metals, and you're actually helping them out. As far as what the costs are, they're very much in line with everybody else. And the reason they do that is they don't have any great marketing campaigns. They rely on the people that buy from them to market for them. And that's how they're able to maintain the markup structure that's similar to all others. And just go a step further, because I'm very clear. I mean, I don't need anyone calling me up and saying, well, David, if you buy a small amount, like one coin, you're going to pay a very high markup. If you buy a roll, you're going to buy less of a markup. If you buy a box, you're going to buy less of a markup. And all dealers are pretty much that way. There's a few that will do what's called loss leaders, that you buy a coin and they'll ship it for free or have a very small shipping cost. And these are people that are actually losing money on that transaction, hoping that you will build a relationship with them and make a larger purchase in the future. And I have no problem with any of that. I just want to shoot straight, let people know this is something that they could take a look at, and it could help them not only save on a regular basis, but also, if they're so inclined, they could utilize it with their email list, their website, or what have you.
Thank you very much for your time.
My pleasure, Bob. Thanks for having me.
I want to thank you so much for listening in today. Make sure to go to the website dedicated to David Morgan's new book, www.thesilvermanifesto.com. Get yourself a copy. And of course, make sure to visit our website for all the updated blogs and to read about the undervalued companies that we're following at www.canadianmineanalysis.com. The opinions of the host and of the guests are their own and may or may not reflect the opinions of this website. This podcast is copyrighted 2015 and may not be copied or distributed without a written permission.